Okay, thank you so much. Hi, evening everyone. Such a huge crowd today. Okay, you're very quiet. I very kanchiong. Okay, maybe before I start, let's have some interaction. Can I check who haven't have dinner yet? Oh, okay, then I talk faster. Okay, enough interaction. Okay, so I just want to make sure we are all in the right place. I'm actually going to talk about this topic, using REITs for your long-term savings. By the way, I'm going to be very evil today. There was one feedback for someone who attended this part. He said after that 3 nights cannot sleep. So for those who worried, you may want to go out for dinner first. Okay, but it's a sad fact but true. That's why I thought it's actually very important to share what I'm about to share very soon. Okay, standard disclaimer, information provided in this seminar is for illustration purpose, insufficient for establishing any investment recommendations. So sometimes when I talk, I get so excited, then I talk about some company names. So that one is, I'm actually not licensed to actually give any investment advice. So if you happen to buy already, after that lose money, please forget about me, okay? Who is that speaker? I can't remember. Okay, make money, then give me a call. Okay, can I also need to declare that because I'm not licensed, I'm not restricted in buying of shares. So some of the shares that I actually mentioned maybe have some stake inside. So especially today drop, maybe I come in. No. Okay, I'm not doing that. Okay. Anyway, so please take note. I need to actually make this declaration and disclaimer to let you know. Okay, a bit about myself. That's me, Chua Min. CFA stands for Chartered Financial Analyst. I'm not related to any insurance company. I'm not an accountant. So basically, this is a designation that's actually used by the investment professionals. Okay, it's a globally recognized designation. So basically, accountant, you need to be CPA. Investment also need to be something. We call ourselves CFA. Okay, so this is what I do for a living. I'm an instructor and speaker for SGX Academy in shares and real estate investment. So basically, I teach. I teach in SGX Academy. So my flagship program includes create a second income stream to long-term share investing. So I'm actually quite glad that some of my ex-students are here. Okay, and I'm actually starting a new flagship program soon called All You Need to Know for Investing in the Real Estate Sector. So very good. Just now 50% said should invest in shares. 50% should invest in property. So all can come to my course. Just nice. Okay. Okay, a bit about my history. So before I joined the education industry, I was a full-time shopper. I help companies to do shopping. Before that, Philip Capital employed me to be a shopper. My job is to help them buy properties. People go Tokyo and buy clothes. I go Tokyo, I buy properties. Okay, I was a real estate investment manager for them. So my job is to go there, look at properties, okay, act like I can speak Japanese, but I cannot. Then after that, buy properties for rental. Then of course, when time is good, we sell them. So when I was there, the asset under management was about Sing dollar 100 million. Okay. So how I end up in the real estate industry, because when I was in China, I joined this company called CapitaLand China Holdings. You all know CapitaLand, CapitaLand, not too bad. Today, what's the price? Not too bad. Okay. Anyway, sorry. Anyway, let's come back. Okay, so in CapitaLand in China, it's called Kaite. In Singapore, it's called Jiade. Because Jiade in China is used already. That's why in China, we have to use the word Kaite. So that's me. Okay, look alike. Still look alike. Hey, last time younger. So again, I was helping them to buy things. So that time, very good. Help them to spend about $200 million buying land, 3 pieces of land in Foshan. So my job in CapitaLand, very simple, raise hand. Quite stressful. Then my boss would be like, okay, raise. Then we took. Then after SMS, okay, raise again. That was my job. Okay. So for those who, I think now Foshan is actually getting more popular. Those who don't know who Foshan, where Foshan is, you all know who is Huang Fei Hong or not? Okay. Who say Huang Fei Hong no Kung Fu? Okay. Who say got Zhuo Rong one? Don't have one. By the way, don't have Zhuo Rong one. Then who say got Si San Yi? Also don't have one. All these Hong Kong, this one is Hong Kong movie have only. You go there, go look at the history, don't have one. Liang Quan have lah. Okay. Ip Man also have. Okay. So for those who don't know all these Kung Fu master, you all remember last year one sad case, this girl run over by van, 18% walk past. That was also Foshan. So I was there. Yeah, correct. Very sad place. Okay. So but Foshan very polluted. Can make money but cannot breathe. Let's come back. Okay. So that was my China. So how I end up in China, because I joined a MTI training program, Ministry of Trade and Industry. They actually quite good, sent me to China, pay my salary. So I was posted to this company called Southern Packaging and helped them list in Singapore. The company got listed in 2004. Okay, so quite interesting. The company listed 30 cents. That was in 2004 till today, haven't went above 30 cents. Okay, so that's why she have kept me there. I don't want to see. Okay, now come to a very serious topic. Okay, all the jokes aside, this is a very serious topic. Why I came to this, because that day I was talking to a retiree. Okay, it was quite scary thought that this retiree when I spoke to her, she said she's 65, retired, single, unfortunately. So she sort of told me that she have $300,000 for her retirement. $300,000. She said it's actually not too bad. Sound like a lot of money at $300,000. Okay, but seriously, she's not investing. So when I was chatting with her, I said $300,000 is a lot of money. Okay, so number one is you think about it. One person stay. Okay, do nothing. Every month, smelly, also 2,000 gone right now. Utilities, handphone, things like that. Then if you're not working, what do? You're spending money. Correct. One month about 2,000, about there. So let's say 1 year about 20,000. Okay, so 300 divided by 20, how many years? You don't like that, leh? Got price. 300 divided by 20, how many? 15. Price is free. Later can come and claim. Okay, 15 years. So 65 plus 15, how old? 80. So if I'm not wrong, statistics, Singapore say, especially women, women can live longer. That's why men got time cry. Let out your emotion. Then women live longer. 87. So what happened during the next 7 years? Okay, what's going to happen in the next 7 years? Okay, so that's actually quite a scary thought, which that's why I thought I definitely need to drive this point across. So of course, today, when you have money, we want to, when we receive money, we actually have these 3 financial choices. Okay, either you splurge it, go for fine dining, go for Formula 1. After Formula 1, never mind, must go for the expensive seat. Okay, splurge it, one way. Number 2 is you save it, put inside your friendly fixed deposit, OCBC bank account, UOB bank account, whatever. Okay, or number 3 is you invest it, or like what I to call create a secondary income stream. Okay, of course, must market my cost a bit. Okay, so create a secondary income stream. So this is the 3 choices that you can do after you got money today. Okay, but seriously, anybody when they buy the LV bag that time, actually think about this financial decision. How does it affect? What's the consequences of this decision 20 years later? Okay, anybody actually thought of that before now? What is the consequences of my financial decision 20 years later? Okay, so I hope that really this one can share some insight a bit. Of course, I give a quite classic, if I'm not wrong, this is quite a standard Singaporean. Okay, so if you are not even this case, then you are actually even have to be even more careful. Okay, so let's say for example, if you're about 35 years old, 1 wife, 2 children, those 2 wives, 1 sorry, your current saving about 100,000, I think about there. Okay, so just talk about your own expenses. Spend your own. Today you spend your own. That means don't talk about your children expenses. Don't talk about all the luxury expenses. 1 year about 30,000. Cannot run away one. Okay, your food, your water, your shelter, your mortgage. Then after that, what else? Your tax, things like that. 30,000 cannot run away one. Okay. So some of us can actually 1 year save 20,000, which I thought was quite difficult. Actually not really easy. Can I just check who actually able to save 20,000 per year? See all the one to raise up their hand. Very bad. Okay, you all save more, right? Okay, but I think about there 1 year save about 20,000, about there Okay. So let's say you are in this kind of situation. So of course, if you choose the first scenario, I splurge it. Hey, 20,000 is okay. I'm still young. 20,000 today spend, tomorrow I make back again. Okay. So of course, now buy car This one 800,000 up front, 14,000 every year. I think only buy Audi or something like that. Maybe Audi A4, something like that. Okay, you buy that. Then of course every year got 20,000 Okay, go and buy branded watch. No, sorry, still left 20,000, right? Go and buy branded watch lah. Go and buy LV bag lah. Huh? Okay, life is good. Okay. So every year, 20,000, 14,000 for the car. So got 4,000 I'll go for vacation. Must don't work so hard. Must go for vacation. Then the remaining 2,000 say, must go for fine dining. Go for fine dining. By the way, there's a joke. Now entertainment. When you want to tell people which kind of entertainment, be careful. That day I go and tell people, now entertainment, go for a Chao Meng concert. You know Chao Meng? Then they say, how come uncle, you so old already? Wow, that's why. Tell people which entertainment, but be careful. Okay? So if this is what you do, 20 years later, what's going to happen? Okay, what's going to happen to you 20 years later? What happened to your car? Scrape, nothing. Branded watch, handbag, they say Rolex you can pawn. Okay, LV bag, sorry. Anybody use 20-year-old LV bag? Don't sit beside her or got smell. Okay? Annual vacation, 0. Fine dining, 0. So you pray hard that you still have a job after 20 years. Okay, which you have to be careful. I was just talking to a HR specialist recently. He said actually, currently there are more and more people, 40, 45, get displaced. Displaced is a nice word. Basically, get fired. 40, 45. You cannot assume that you can always have job. Okay? So 20 years later, if you're in this shoe, better pray hard, you still have a job. Okay? If not, good luck to you. Okay? So of course, not all like that. Singaporeans still got a bit of Confucius teaching. We all save money, right now. Okay? So a lot of us in this situation, fixed deposit, 100,000, save at 2%. So already very high. Do you know UOB, OCBC, DBS, what's the fixed deposit rate? Anybody can tell me or not? Free hug. Anybody? 0.25, right? Okay, so I give 2% already, a lot already right now. Okay, 2%. So another very common tool that we use is the regular saving plan or insurance policy. We actually go into insurance. Let's say if plus bonus, you may get about 4%. So let's say you 100,000 fixed deposit, 20,000 per year, you go and feed your insurance policy. Okay, this case, 20 years later, what do you have? Your 100,000 become 148. Your saving policy become 595, 600. Total 744, 200. So is this a lot of money or not? Okay, is this a lot of money? $700,000, not too bad. A lot of money, but you seriously think about it. Inflation. Okay, I don't want to use 5%. Inflation rate, I don't use 5%. 5% is including of car and house also. Unless you every year buy car, buy house one. If not, your inflation rate shouldn't be 5%, should be only about 3%. Okay, average about 3%. So for food. Okay, so don't believe, go and ask your uncle. Last time Milo paying how much? 60 cents, right? Today Milo, 250. 3%. So if I use this 3%, what's going to happen? At inflation rate of 3%, $54,000 is required 20 years later for the basket of goods that costs 30,000 today. Okay, like I said, remember why I use 30,000 is the one you spend on yourself. So that one got to continue right now. After you retire, you still need to eat, you still need to pay handphone or whatever, right? Okay, this 30,000, this basket of goods, okay, that costs 30,000 today, 20 years later, it will cost how much? $54,000. Okay, same basket of goods, 20 years later will cost $54,000. Okay? So you just do a simple mathematics, 744, okay, divide by 54. Number of years sustainable is what? 13. 13 years. So let's say 20 years later you are 60, by 73. So you just tell yourself, either please let me strike jackpot, make $1 million, or let me strike lightning. Okay? So the maths are there. The maths, the numbers don't lie. So seriously, think about it, do your sums. That's why I thought this is quite scary, and I realized a lot of Singaporeans don't realize this. Okay? So of course, if let's say you can get 10% per annum, this 100,000, this 20,000, you can get 10% per annum. Okay? So that means every year return of 10%. Okay, 20 years later, what's going to happen? 20 years later, the amount of money is going to be 1.8 million. 10% per annum, 20 years later, it's going to be 1.8 million. Okay, some of you all don't believe me, right? I'm quite sure people don't believe me. So, okay, before that, So of course, you've got 1.8 million. So of course, if after that you just take 5% dividend, okay, you have 90,000. Okay, so like I said, it's 54,000. So with 90,000, you can cover your daily expenses, and you still got some for your luxury item. Okay, so a lot of people don't believe me. I say I play numbers game, right? So I purposely draw this chart for you all. Okay, if not, don't believe, go back, use Excel and do. All those don't know how to use Excel, ask your son, your doctor to do. Okay, so what you do is very simple. Okay, like I said, 100,000, right? Beginning of year. You get 10% return, means end of year 1, you get what? 10,000. Just 0.1 multiplied by this, you get 10,000. Okay, so like I said, every year you are able to save 20,000. Okay, so end of year you get $130,000. Okay, so 100,000 end of year 1 become beginning of year 2 $130,000. Okay, you do the same. Okay, and of course you can do 20 times. Or if you use Excel, right, you highlight, click, you drag. Okay, so you see after 20 years, $1.8 million. Okay, so this is called what? The power of compounding. Okay, the power of compounding. So if you do the same thing for 2%, okay, this is the number you get, 600 plus thousand only. Okay, wow, I see people nodding head, very happy. Hopefully nobody's shaking head. Tonight no need to sleep already. No, okay, okay. So you all can go back and try. So the numbers don't lie. So really think about it. It's actually not a joking matter. Okay. So of course, I'd like to urge you, make the right financial decision. Your financial decision today will either make you a pauper or millionaire in 20 years' time. Okay, that's my point. And of course, if you can, start early to grow the goose that lay the golden eggs. Okay, start early to lay the goose, because the earlier you start investing, okay, over time, of course, your portfolio will get larger. Okay, so next question. I'm sure you all have this question. Oh, okay lah. Everybody also know get high return but how to get high return, right? I say easier. So what are the instruments? What are the instruments with higher investment returns and suitable for long-term savings? Okay, so my point here is, okay, fine, I'm convinced that I shouldn't put my money in the fixed deposit. So where else can I put my money? So here are some of your choices. So of course, you can put in life policy, corporate bond, real estate, gold, or of course shares. Very important, shares. Why? Because I'm from SGX. Shares very important, okay? So these are the pros and cons. For share investment, estimated returns over long term is about 10-20% per annum. Okay, over long term, 10-20%. Certain years higher, certain years lower, but average out over long term is 10-20%. Okay, the risk is medium to high. And just put it, just a rule of thumb, medium to high means what? There is chance for you to lose up to 50%. Okay, so for those who bought Olam last year, before the drop was 320, so Olam actually went down to 160. So that means what? You lost 50%. Okay, so there are risks involved. So for those, wow, the market drop, then after that your heartbeat also beat faster one. Then be careful, okay? So there are risks involved. So is there regular payout? The answer is yes, in the form of dividends. Okay, if you buy shares, means what? Basically you are investing in the company. So when the company make profit, okay, they have dividends, they actually share among the shareholders, and you actually get the dividends. Okay. Liquidity means what? Is it easy for you to buy and sell now? Of course, it's, yes, very easy. You can call a broker, or either that, just internet can buy, can sell already. Okay, you can actually do small investment quantum. There are stock that's 1 cent. Okay, so 1 cent means what? $10. But then your transaction cost is 25 so $10 can invest already But be careful this 1 cent, sometimes 1 cent, stay at 1 cent for a very long time Okay, so anyway, it's available in small quantum. Okay, remarks very important. To achieve that 10-20%, okay, very likely you need to do portfolio management. Okay, portfolio management means gather about 30 stocks. Okay, know how to manage them well. Okay, so if you actually must be active portfolio management, means what? That means when time to sell, you sell, time to buy, you buy. Okay, so if you do that, it's likely that you can actually get about 10%, 20%. Okay, so it's quite possible. So for those who don't believe, who own actually Singtel? So remember last time, 10 years ago, government asked us to buy Singtel shares, right? That time, what's the price? 170, maybe, about 170. So today it's 340. Okay, you can just do a simple rule of thumb. It actually went up by 100%. Right or not? Divide by 10, 1 year, you actually hit your 10%. So it's actually very possible. Correct? And that I haven't even include things like dividend. So the official one is 15%, if I'm not wrong. 15%. Okay? Shares is one of them. Next is, of course, real estate. Okay? Estimated return is 15 to 20%. But this one is considering leverage and rental. Okay, that means you actually borrow money to buy the property. Okay? Then, of course, you actually buy the property for rental. Then you can hit about 15 to 20% per annum. Okay? Based on historical records. Risk is, again, medium to high. So as what the earlier speaker have shown, it's quite volatile. There are also property that can actually drop by 50%. So for those who, anybody bought Bishan HDB 10 years ago? Now you heng. Recently just cover back, right? For the past 10 years, it was below water. Okay? Regular payout, yes, of course, in the form of rental. Okay? Low liquidity. Okay, it's not so easy to sell. Okay, not so easy to sell. So in fact, you talk to some of the agents, on average, you take about 6 months to actually sell your property. Okay? This period may be a bit faster because Singaporean too much money, don't know what to do. That's why you attend seminar, right now. Okay? So only this period good, but actually normal times about 6 months to sell a property. Okay? Of course, it's large investment quantum. Okay? So take note, this is not exactly a passive investment. You need to carry out things like tenant management and property management. Okay? So unlike shares, sometimes a dividend come to a bank account, you worry, how come got money come to my bank account? Is it because money laundering? Wow. Got money coming, you also don't know. This one, you have to manage a bit. Okay? Like one joke I have is this friend or this friend bought a $3 million property at $3 million. Drive a Mercedes. Then the tenant call him, excuse me, the bulb is spoiled. Can you come and change? Then he think, who can he help? Ask to help to change the bulb. Think, nobody. So he drove his Mercedes, go to NTUC, buy the bulb, then go to the house, stay on the chair, change the bulb. That's why. So it's not passive income. You have to do things like that. Okay, so be careful. Okay, gold, historical return about 10 to 15%. Risk is medium, slightly better than stocks. Okay, this one I want to highlight. Because recently I see some cases that tell me gold got regular payout. Gold got dividend. So I'm thinking, is it because the gold, you put inside the water, the gold will grow? Cannot be one. Then after that, how? Put inside, heat up, the gold grow. Cannot be one. So where is the dividend coming from? For stocks, right? Because the company make money, got profit, you give you dividend. Okay, property, I rent out, I got rental income. So gold, the regular payout from where? Think about it. Also, for those who tell you, gold, every month I give you 2%, 3%. Ask him this question, from where? Cannot be from his own pocket, right? So good. Okay, high liquidity. Okay, so if you actually go physical, worst to worst, go to pawn shop. So can go in high liquidity. And of course, you can go for small quantum. Okay, so that day I almost buy a gold chain. Then think I actually invest in gold. But think, I buy a gold chain, then myself give to my wife, right? Then I think, if I give to my wife, there's no way I can get back, right? So that's not investment anymore. So I don't know buy. Okay, so gold. Bonds, recent we have 2 to 6%. Risk is quite low. Okay. Regular payout, yes, in the form of coupons. Liquidity is medium. Okay, so bonds by right can, like shares, you can actually trade in the market. Okay, you can actually buy and sell in the market, but apparently now the liquidity is not there yet. So if you want to buy and sell while you're holding a bond, not so good. Okay, a lot of times you may need to hold to maturity. If nobody want to buy the bond from you, you may need to hold to maturity. Okay, so that's something you need to watch. But of course, I'm quite sure going forward, our bond market will be more active. Okay, investment quantum likely to be mid-sized. Okay, in terms of tens or 25,000. Okay. Okay, life policy about 4 to 8%. This one include bonus. Include bonus about 4 to 8%. Low risk, again no payout. Okay, low liquidity. There's a required holding period. Investment quantum it can go small quantum. Okay, so it's usually tied to insurance. So if it's terminate, your insurance will be terminated as well. Okay, so these are the few instruments you can actually help to increase your 0.25% return. Okay, so each one has its pros and cons. So there are no best investment instrument, only the most suitable. Okay, So of course, for those buy share price drop, buy property price drop, then don't buy lah. Now some people like that one, he tell me, hey, cannot lah. Once I buy the share sure drop. Then don't buy share lah. Buy something else. Okay. Well, some people is buy property increase. Hey, why you so soon? I don't know anyhow. Then buy property lah. Okay. So there's no best, only most suitable. Then of course, like what he says, diversify lah. Okay. Buy a bit share, buy a bit property, buy insurance, buy everything lah. Diversify. That is the best Okay. So far so good So far okay Can Okay. Then I come to third part. Of course, I'm from SGX then I talk about REITs REITs is one of the products So REITs is definitely also one of the products you can actually get better returns. It's actually very suitable for long-term savings. Okay. And of course, you can get better return than your fixed deposit Okay. So of course, what is REIT? So today I will spend maybe the next 15 minutes to just run through very quickly what exactly is a REIT and why is it suitable for long-term savings. Okay, REITs. Okay, REITs stand for Real Estate Investment Trust. It's basically a vehicle structured for investors to pool their capital for investment into large-scale income-producing properties. Okay, so think of it this way. Let's say tomorrow we all become friends. Then you all trust me so much. I say, hey, I give you all $1 million. Or then I collect $100 million, right? Okay, I take this $100 million, go and buy a property. Okay, go and buy Republic Plaza or whatever. After I rent out, I collect the money. Then I distribute the rental to you, the money to you as dividend. So effectively, I have actually formed a REIT already. Okay, so this is just the business model of REIT, simple as that. Okay, pool money together, buy property, rent out, collect the rental, distribute among shareholders. Okay, that's a REIT already. Okay, so what is so special about REIT? So basically, REIT is a trust structure. Okay, so the good thing for us is this, for REITs, right, they actually have to follow this mandatory distribution rule, of which at least 90% of the profit has to be distributed. It's a must. 90% of the profit have to be distributed. Okay, so business trust, does it have to follow this rule or not? Don't have to, thank you so much. Okay, but business trust is structured to give dividend, but then they actually don't have to follow this rule. So know the difference for REITs. 90% of the profit has to be distributed. Rule number one. Okay. Rule number two is they have to follow these debt ratio limits. If there is no credit rating, okay, credit rating now you all should know better. The S&P, AAA, AA, that kind of thing. No credit rating, the company can only borrow up to 35% of the property value. With credit rating, can borrow up to 60%. Okay. So, but by the way, the law never says what your credit rating need to be. Okay, like to know. So credit rating is just that I go to the agency, rate me, that's all. So if let's say rate triple D, I also can borrow 35%. Okay, doesn't mean that with credit rating you're better. That's not true. Okay, then don't ask me why the law like that. I don't know. Okay, so basically without credit rating can only borrow up to 35%. With credit rating can borrow up to 60%. Okay, so of course what is most important to us is this: 90% of the profit have to be distributed as dividends. Okay. So of course, from the company's perspective, why take the trouble to adopt this structure while we can also do it via company? So there's actually a lot of shares, a lot of companies out there also have the same business model, buy property, rent out. Okay, so why people go for REITs? Okay, so the most important reason is because of tax exemption, or we call it tax transparency. So which means to say, if you are a REIT, right, my incomes that comes in, okay, my rental income at the REIT level, okay, it's not taxable. Okay, then the income go through me, then after that go to unit holders already. So effectively, then after that, because now dividends is not taxable, so effectively, if you are a retail investor, okay, it's tax, non-tax. This whole process is non-tax. Okay? But let's say if you do it via a company, let's say instead of doing REIT, I do a company. That means, like I said, I form a company. I use this company to buy properties. So rental income become my what? Become my revenue, right now. My profit, then profit is taxable. Okay? So if I'm doing via company, rental income is taxable. Then only after tax, then whatever remaining then go to the unit holders. Okay? So from your perspective, this is another benefit of REITs. There's actually definitely a lot lesser tax as compared to holding the properties in companies. Okay? So like I said, typical REITs business strategy, very straightforward. I collect money from investor. Okay, then after that, I borrow money from the bank. Go and buy property for rental. Okay, the REIT's main business model is for rental, very straightforward. Okay, sometimes they do buy and sell, but that's definitely not the main business strategy. Their main business model is buy property, hold for rental. Okay, so that's why it's a very good saving tool. So effectively speaking, it's same as you go and buy the property. Okay, but now you buy bigger property. So if you own one lot of Suntec REIT, you can tell people, that toilet is mine. Okay, so effectively that is true. Okay, so you actually buy for rental. So of course, rental comes in. Number one, have to pay interest to the bank first. Then remaining become dividends to the unit holders. Okay, so this is REIT, very simple model. Okay, so of course, main income for REIT is rental income, definitely not for capital gain. Hey, don't be like my mother. My mother say, hey, how come I buy the REIT price don't move one. It's not supposed to move. Then after that, tomorrow ask me again, why don't move? Don't move one. Okay, it's for dividend play. Okay, so this instrument is for dividend play rather than for capital appreciation. That's why it's actually quite good for long-term investment and hence very good for your long-term savings. Okay? So just to illustrate, what do I mean by capital gain? What do I mean by dividend play? Okay, you think about this way. Let's say this is you or this is us. You have a choice to either invest in property developers, your capital land, your hobby, whatever, or invest in REITs. Okay? So let's say, for example, okay, property developer, what's their business? Okay, property developer is what? I actually buy land, okay, build property for sale. Correct not? Okay, I build property for sale. So what's my income stream? So do I get regular income or only when I sell property then I get income for developers? I sell property then can get income, right? Okay, so of course it's irregular. So of course in this case, let's say when real estate prices increase, what's going to happen to my profit? Go up or come down or remain the same? Go up, Hey, you're not answering me again. I give you a free hug. To all those who don't answer me, I come and hug you. Okay, so if profit go up, your share price go up or come down? See lah, scared I hug, right? Okay, so for REITs, what's the business model? I buy properties for rental. So rental, people pay rent, every man have to pay, correct not? So of course, then my income is regular or irregular? Thank you. See, the free hug works, okay. I see later who don't answer me, I go and hug you, okay. Okay, so when real estate price increase, talk about short-term rental change or not? Any change to a rental? When real estate price increase, any change to a rental? Short-term no. So if rental no change, profit any change not? Okay, profit no change, then after that share price any change not? Okay, so very straightforward, this is my point. If you want to play capital gain, of course go for things like your developer stocks, capital land, hobby and things like that. Okay, so if you want stable dividend yield, this is the kind of instrument you should be looking at REITs. Can know the difference? So those want capital gain, what kind of stocks you can play? Genting lah. Genting lah. Go in, gamble, lose already, then go and buy the share, buy back. I just donated some money, then after that, the money Genting become profit, right? Then after that, become shareholder, come back to me. It's why you make yourself feel good after you lose money. Okay, so of course, those are what capital gain shares. Okay? Oh, laugh, that means a lot of people go and play on high. Okay? So of course, like I said, capital gain is this case. You think a profit increase, share price will increase, go for capital gain. If you want like a dividend play, long-term investment, okay, go for REITs. Okay? So today, what can you choose from? What can you choose from? Total, there's about 29. Okay, please take note, those with asterisks, they are business trusts. Okay, they hold properties, but they are business trusts. So remember, the main difference to you is business trusts, are they required to give out 90%? No. Are they required to pay tax or not? Okay, business trusts need to pay tax. Okay, so this is the difference. Okay. Hey, take picture, let me know, I post for you. Okay, so 29. I very hardworking. The latest one I also put inside the Far East Hospitality Trust. Anybody subscribe and got it or not? Quite happy, right? 93 cents, now what? 99 cents. Quite happy. But careful. The Ascenders Hospitality Trust. Anybody subscribe and got it or not? Ascenders Hospitality Trust. Okay, good. Thank you so much. That one also not too bad, I think. Why not too bad? Because I subscribe, I got it. Okay? 29 for you to choose from. So take note, those with asterisks, okay, means they are business trust, so we have to be careful. Yes? Okay, later I will show you. Wow, but I should charge you, but never mind. Later I show you. Wow, just nice. Okay. Okay? Okay, so for REITs, you have to understand, end of the day, you are buying the property for rental, so at least know what property they are. Okay, then after that, I buy Sabana REIT. Why? Because Sabana sounds very good. Wow, Sabana, like holiday like that. Then don't even know what they do. Then when the price drop, then look out, why? Okay, so of course, understand what property are you actually, holding it. Okay, so again, here's the list. We are very strong. We have quite a lot of office buildings. Okay, Capital Commercial, Fraser, Indian Boo, okay, K-REIT, Maple Tree, Suntec, Treasury, China Trust. So those with asterisks are those with overseas properties. So again, of course, overseas, cannot view, cannot touch, is higher risk. Okay, so ask you, if you are REITs manager, annual report, take photo, you take the nice photo, or the property with a lot of people there, or the property nobody there. If you still want your job, when I do annual report that time, I got 20 properties. I should take photo of the property. I take the one that is doing very well, or not the one not doing very well for my cover page. Because beyond cover page, you all don't read, right? Anybody read after see cover page, all throw already. So cover page, of course, I take the one very nice. So be careful. Those with overseas property, of course, higher risk. Those in Singapore one, go and take leave. If the guard stop you, tell him 1401. Sure can one. Just tell the guard 1401. Can go. Okay? So go and see whether are there tenants or not. Serious, this is what I do. You all don't believe. During 08, what happened? 08, we got lemon crisis, right? I go and see K-REIT, 16% U. 16%. I put $1, end of the year I get 16 cents. Okay? Not 0.16, 16 cents. So I think, how come so good? Is it half of the building empty? Then go there and see. Okay. See there, a lot of tenants there. Capital Mall Trust, give 10%. So I say, wow, sure got problem. Then I go Funan IT Mall. All the shops are there. Then after that, okay, never mind. Maybe Funan IT Special. I go to Bishan Junction 8. Have to go and queue for parking. Okay, never mind. Maybe the Tampines Mall is bad. Wow, Crystal J have to queue. What crisis? Then of course 10% you take, buy. So of course the price actually went up. Okay, so REITs is something you can see, can touch, and feel very good. Okay, companies don't know what is the management doing. Sometimes this one do this, do that. Okay, REITs is all about property. Okay, can see, can touch, can feel. Okay. So industrial also very strong. 8 of them: Ames, Sanders Street, Cachet, Cambridge, Maple Tree, Sabana. Okay. Also again, those with asterisks is overseas properties. Okay. So for malls, so next time you all go shopping, and after that quarrel with the what you call that, the shop assistant, then go back buy REIT, then tell them, hey, I own the mall. It's true, it's true. It just own very small, that's all. Okay, yeah. So this is something you can see. If you can see all the, let's say, Raffles City all tenanted out. Okay, you go and see Funan IT Mall all tenanted out. That means you're going to get your dividends. Okay, because if the shops are there, they're going to pay rental come to you, after all the costs come to you, become dividend. Okay, simple as that. Okay, same as you go and buy property for rental, same theory. Okay, so you have quite a few malls: Capital, Retail, Capital Mall, Fortune, Fraser, Lipo, Perennial, Star Hill Global. Okay, so by the way, Star Hill Global is the one that owns Ngee Ann City. Okay, this one my wife tell me quite good. Because sometimes I go Ngee Ann City, sometimes the central atrium quite empty, right? Sorry. Ngee Ann City. Takashimaya. Takashimaya. You know, thanks. If I speak too fast, you let me know. Because kanchiong, so people look at me. Okay? Takashimaya. Sometimes I go to central atrium, I say, wow, how come so quiet? Can sustain not? Then my wife tell me, don't worry. The LV shop will always be there. If not, I will be there to support. Okay, no? So yeah, you see, things like that. So seriously, this is how I evaluate REIT. The shop has always been there, and seriously, LV shop is there for so long. Okay? Now hospitality, hospitality not hospital, but it's hotel and service residence. Have Ascenders, Escort, CDL, Far East, all these players. Healthcare, we got healthcare, got First REIT, got Parkway Life REIT. So for those who think that the hospital is going to be there, hospital won't run away. So yeah, so actually some of these REIT very good because what, they only have one tenant. They only have one tenant. So like for example, Gleneagles Hospital, the REIT, you just tenant out to Gleneagles Hospital. So if you think that Gleneagles Hospital is going to be there, then you got 100% occupied. Okay? If you think that Gleneagles Hospital one day going to leave, then you got 100% vacant. Okay? So healthcare buildings. We got residential REIT for Sizen. Sizen actually do Japanese properties. Okay? So this is the thing that is going to answer your question. What is the dividend yield? Estimated. Estimated. Okay, well this one I got big disclaimer. Based on 2011 dividend payout, which may not continue going forward. Don't take picture one. Please zoom here. Thank you. Okay, disclaimer. Zoom here. Invest at your own risk. Okay. Okay, then those with asterisk one is using projected dividend provided IPO. So what I've done here is this. I take the whole of last year's dividend, divide by today's price. Okay, I take the whole of last year's dividend, divide by today's price. So if let's say the last year dividend don't change, which most of the time is true, because the rental don't change much. Right now, those who rent properties out before, you know. Okay, rental don't change much. If let's say rental don't change, then Lipo more, you get 10%. Okay, but sorry, the price is also outdated. Okay, so let's say based on 1st August price, the yield is 10%. So what is the yield again for UOB, DBS? 0.25. So 10 divided by 0.25, how many times? 40 times. 40 times. Okay? So of course now the price went up a bit, so I have to be careful. This one is not the latest one. Okay? So today on average, you are talking about, there are some REITs are quite branded REITs. Or I say got Akong one. Capital, those with capital something. Ascenders something. Maple Tree something. Got a bit of Akong. Those one, all those we call like branded REITs, more stable. Today I think give between 5 to 6. 5 to 6%. No matter what, it's still better than your fixed deposit. Okay? Okay. So I tell all the good things. REITs, higher return come with higher what? You see? Good. They understand the first part. Risk and return come together. No free lunch. Okay? If you want higher return, you must be able to take higher risk. So where is the risk coming from? So number one is this, their own business risk. Okay, like in this case, like for example, this is from an analyst. They think that office rent is likely to fall. So if your office rental fall, what's going to happen? Your rental received is going to be lesser. Your dividend go up or come down? Come down. Okay, so there's one risk. Okay, so but retail rent is on the rise. Okay, so things like that. There's this business risk. Enough. Okay, so very important. Number two is credit risk. So if you remember the first few slides, so one of the very important way for the REITs to make money is what? Borrow money. Okay, one of the very important way for the REITs to hit such high returns is because they borrowed money. Okay, so a lot of them borrow quite a bit of money. So the question is, if the debt matures, when it's time to repay, can they actually pay back or can they refinance? Are they able to refinance at the same interest cost or even lower? Okay, there's one period. Okay, one of the reasons why during 08 times the REITs, the price drop is because a lot of people are worried that some of these REITs, they cannot refinance. Okay, if they cannot refinance, what happens? That means, I got this loan due already. If I cannot refinance, okay, I need to pay back the money, but I cannot borrow a new one. What's going to happen? Correct, I need to sell the property. And at a point in time, you can only sell to who? Sell to sharks. People like all of us. Sharks. Orchard Road 800, then you buy, right? 2,000 crazy, 800, they look for you right now. Okay, sell to sharks. So that's why this is the risk you have to take note. Okay, credit risk, can they actually service their loan? And of course, there's market risk. Apparently, based on historical records, so how you read this chart is this: the blue line is the STI, the green line is the REITs index. Okay, so apparently they move in tandem. Okay, they move in tandem. It's just that you can see, actually the REITs is a bit more retarded. It moves slower. I see this part. Okay, the STI drop already. It take a while for it, the REIT to drop lah. Okay, can you see? Okay, but they move in tandem lah, so your price can drop lah. Okay, so not like fixed deposit lah. You put 100,000 in, the 100,000 can take out lah. So sometimes for REITs you put 100,000 in. How come some is not there? Okay, the price can drop. Okay, so these are the risks lah. These are the risks you have to take note of. Okay. So hope I'm not saying nonsense. Some people saying like, wow, tell me so good, then I got risk. That means can buy or cannot buy? Oh, yes. Can, possible. That means the risk bankrupt lah. Can, possible. The risk bankrupt lah. Buy the property, got burned down by fire or whatever, I don't know. Then property gone because you're owner of the property. Okay? Sorry lah, have to be like that lah. There is no straightforward answer. If I straightforward answer, everyone strike rich already, right? So life is like that. You have to make choices. Risk and return come together. So, but at least now you know something. Okay? I know some of you are cursing me right now. Yeah. Say so much. So tomorrow buy or don't buy. That's the best I can do. Yes. For long term, yes. But short term is still based on the yield. For me, I believe in the yield. For the rental. Okay? But long term, the property value actually do affect the price, definitely. Okay? So one way I can help you better is, of course, come to my courses. Okay, very fast. This one very fast, 5 minutes can settle. Of course, like I said, I'm from SGX Academy. We run courses here. My next course coming out of this is all you need to know for investing in real estate sector. It's a 12-session course starting 5th of September. Break down to 3 parts. Part 1, understand real estate market. I'll talk about the physical real estate market. Part 2, learn to value property stocks. Okay, how do we evaluate property stocks like your hobby, capital land, and things like that? And part 3, how to evaluate REITs. Okay, so this class is capped at 20 per person, and there's makeup class available. Because it's the first time I'm doing it, there's an offer of $1,200. Okay, I know some of you find expensive, but because this one we actually do in-depth analysis, that's why I have to charge a bit more. But if expensive, right? Don't worry, got cheaper one. Okay, the other course I'm going to hold end of this month, called Case Studies of Company Valuation and Portfolio Management. So basically, we'll go through the theories of how do we price a stock, how do we evaluate stocks. Okay, whether this stock can buy, cannot buy, then whether the price cheap or expensive. Okay, so the thing special about this course is that we have a 6-month continuous support. So what happened is, we will actually apply the theory with real-life cases. Okay, so we take 2.5 days to go through the theories of company valuation and portfolio management. Okay, then after that, 6 months later, okay, we meet once every month to apply the theory on real-life case studies. We actually go through actual companies to apply all these theories. Okay, so I dropped by half price, $630. Okay, same thing, cap and 20, makeup class available. Still too expensive, right? You sign out 1280 lah. So the first one, effectively, you get 50% discount. Still too expensive, never mind, still have. This Sunday, one day, I call it Fat Tat. Fat Tat, okay. So in investment, there's actually 2 main skill sets we go after. One is called the FA, Fundamental Analysis, okay, which is what I'm specialized in. I look at the company, whether got profit or not. Okay, and of course, profit will drive the share price. Okay, the other school of thought is called TA, Technical Analysis, whereby you see those people look at charts, right? Or then after that, what? The moving average, when this one crossed that one, then they use a TA. So what happened is, I can't sue FATA, I fat that. Okay? So basically, we will have a conference, 2 more days left. The first day was last Sunday, more than 60 attended. Okay, so this one, we will actually look at growth stocks for this coming Sunday. So what happened is, I'm going to show you how I use FA skill to pick up some of the growth stocks. Okay? Then after that, my TA partner will see, okay, with this is the growth stocks, how he actually use TA to analyze whether is it good time to buy or not. Okay? So this is 88 per session. Lunch provided. Okay, got lunch some more. Okay? So I also do conduct some short seminar, half day. You may want to keep a lookout. You can actually check out this website. Okay, I do investment in REITs, guide to property stocks, but this one later date. Okay? Still too expensive, right? God. Those who sign up for today, you get a book by me for free lah, huh? Okay? So this is the book I'm talking about. Free if you sign up for courses and the seminar lah, huh? Okay, so for those who want to find a bit more, can talk to me. Okay, so this is a book written by me. I'm very happy. Today I talked to publisher. Publisher say, I want to support. Well, now I suddenly realize, I always thought publisher always publish a book. Now they don't want. You want to publish? Let me read first, see can or not. Today just got approval, quite happy. Okay, so this is a book that I've written. So basically, it's more on the FA, fundamental analysis. Okay, still too expensive, right? Okay, then free lah. This one free. Like me on Facebook. Then every time I give my regular investment review lah. This one free. Okay. Okay, that's all I have. I'll be outside the room if you got any question. So thank you so much for your attention. So see you around soon. Thank you so much. Thanks.